Beginning. All right, you good? You got sound and everything? All right, this one's being. I'll tone this one down because the ones that are recorded, I have to make sure I rein myself in a little bit and make sure that it'll be always on YouTube for posterity's sake for forever. So there's so much of YouTube of me out there that there's no way I could ever run for office. It would just totally be done. It'd come roaring out in a hurry. He said this and that's exactly.
If they can, you can.
Well, that's true. Exactly. It's one of those. No, I'll pause. Some of the. Hey, good morning. Funny stuff aside, is you've seen the one where that meme out there where it's it's Hillary out there saying Trump needs to release his tax returns, and right below it is Trump saying, "I emailed them to you," which is kind of funny. Yep. Joseph, my son, showed me the other one. Said Hillary's planning to be the first F president. He said, it used to be female, but she lost the email. That's kind of funny. Those are pretty funny. That was pretty good. So, she wanted to be the F president. I used to say email, but too funny. Anyway, we're only, the good news, I live in Tennessee, and we're a red state. So, I mean, when I say that, it's just that I don't get any ads. I get down here, and swing states getting hammered, right? And so all the money's being spent in Florida and Ohio and all the places where you've got these where your vote really matters. Not that your vote doesn't matter, but you know what I mean. It's already some places like where I am. It's kind of a foregone conclusion. It's all done. All right, so
and they're crisscrossing the state right now, both of them.
Oh yeah, exactly. As I drive from Tampa to Jacksonville, I'll probably see their buses all over the place. Exactly, as I go the I-4 corridor.
Hillary off the road.
What's that? I'll pull in front of her and that's right. All right, cool. Hey, glad everybody's here. Let's. We won't go real quick survey. Who is currently incorporated as a real estate agent? Good. All right, no one is. Good. That's perfect. That's why you're here, right? And that's fine. It's just sometimes when I give these, I got people, I was telling Ashland last night, we had two people that are already incorporated, but the two of them said, I did it a couple years ago, and for the life of me, I can't remember why. All right, someone told me to do it, and I'm trying to figure out if I'm doing it right or if I should be doing it differently or whatever the case may be. So, all right, this will be clean and simple. I'm going to kind of lay out the groundwork of why you do it. Then we're going to go through an example. So I'm a big example guy. I like to see hard numbers that show you, hey, look, this kind of drives it home. What's the difference in an incorporated agent versus what we call a Schedule C agent? All right, because you're going to learn quickly that the whole reason behind incorporating is all about the tax savings. It's not about the inherent protection you get as a being a corporation, like you're trying to. Anybody buy and flip in here? Buy and flip investors? Okay, when you do that, sometimes when you do that, you go to these seminars and people are telling you to put every property into its own individual LLC. All right. Yeah, right, exactly. They do that for the legal protection, right? Because they're trying to put all those assets. If something goes inherently wrong with that asset, then they can't come over your whole. It's kind of protecting that. So there's some advantages of doing that. This is not what this is about. This is taking your real estate business. Good morning. Your real estate business and incorporating it, and why you would do that. All right. So a couple quick disclosures on the front side. I'm not a CPA, an accountant, a bookkeeper, an IRS agent, or a tax specialist in any way, shape, or form. All right. So anything I say to you, you're going to have to go back to your tax professional and re-verify. I'm going to say that, and this is being recorded, so I can always defend myself on that. All right. I'm not a tax attorney, paralegal, judge, Supreme Court justice yet, or have anything to do with the legal profession if I can help it. As a broker of an office that has over 1,000 agents now, I try and avoid dealing with the legal profession. Trust me. Okay. Usually when I'm dealing with somebody that has that's an attorney, it's usually not a good day for me, all right, unfortunately. So with that in mind, I'm not any of those either, okay? So you can talk to these people and verify what I'm telling you. By the way, my email's here. I don't know if you can see it. I'll give it to you. My name's Bob McDougall, broker owner of Future Home Realty. Myself, I incorporated my own personal real estate business back in the late 90s, and I'd been in the business about 5 years at the time, and I wish I had done it 5 years prior. All right, I really had, just because once I got the gist of it and understood why I was supposed to do it, because I'd been told too, hey, you should do it. No one ever could really give me a good explanation. Well, why? Well, just because. Well, because why? And they said, well, you get to write off stuff. Well, I write off stuff already, right? And we'll talk about that. You're not going to be able to write off any more other than the cost that it actually takes to incorporate. You get to write that off, but you're not going to write off new expenses that you couldn't find already, all right? It's not about that. We're going to show you the difference, what it is. By the way, this will be on YouTube. Future Home Agents, if you're with us, it'll be on our YouTube channel. You can find us. If you're not a Future Home Agent, just email us and we can get you the link to it if you want to go back and kind of re-review it. Or if you Google it, you'll probably find it, right? So YouTube's pretty open space there. You can kind of find it out there. But we'll upload that probably later this week. But if you want the PowerPoint slides, just email me. That, if you can see at the bottom there, it's BOBMCD at futurehomerealty.com, and we can email. I'll email you the PowerPoint of this as well. Cool. All right. So some more disclosure. All right. Everything I tell you today, you need to verify with your own tax accountant, your own accountant, tax professional, and/or attorney. All right. You want to make sure that they're on the same page as you, because you're going to have to put a team together. All right. That should be doing your stuff. And when they're doing your stuff, you want to make sure that they're tracking with you, right? That they're in agreement with what you're saying and doing. All right. All items discussed are subject to change due to the unstable nature of the politicians we elect to quote unquote represent us. Right. So what I'm going to tell you works today, but it may not work, January 20, whatever. Okay. If things start to change, I'll tell you this. I told you I live in Tennessee. I don't do any business in Tennessee. All my business is here. All right. But I've looked into it up there because I am licensed up there, and it doesn't, because there are some other things that kick in the state of Tennessee, that it doesn't, agents don't do this in Tennessee because it doesn't make sense to do it. There's an additional tax that they levy on distributions of distributions from corporations that kind of undoes what the benefits you would have in doing it, all right? So with that in mind, it works for Florida, and it works well if you follow it along and make it happen, right? By the way, pretty small group here, loose form, questions along the way. If it's a slide I'm going to get to in a minute, I'll tell you, hey, look, hang on, I'm going to get to that. But if not, feel free to, anywhere along the way if I run through something. Plus, I have a tendency to talk real fast, all right? So they say, I talk about 200 words a minute with gusts up to 350, all right? So just, slow me down sometimes if you need to do it, and that's why it's an advantage having the video, too. You can always go back and put it on put it on 33 instead of, in case any record people. Vinyl's coming back, though, isn't it? All right, actually putting vinyl back. What was it? What were the two speeds that because the big ones were, what?
33 and 45.
33 and 45, that was it. Okay, gotcha, right, exactly, because there's RPMs, exactly. There are different RPMs. The bigger albums played at a slower RPM than the, okay, all right, good deal. All right, so anyway, so here we go. Here are your reasons to incorporate. The main reason you incorporate is tax savings, okay? That's again, it's not about the legal protection. Your broker, has an E&O policy, and actually your broker's the one who gets sued if you ever get anything, going on anyway. That's who they're really going after. So just realize that. But the main reason you want to do this is tax savings. Followed closely by the second reason, which is tax savings, all right? And then not far behind is tax savings. All right, and then also don't forget about tax savings. All right, because get the whole idea out of your head that this is all some legal thing that's going to protect you. All right, it's not why you do it. I'm going to show you why that I believe. Hey, Tatiana, happy birthday!
Thank you.
She had her birthday yesterday. Yeah, it's great. That even if I could show you a net break even, right? That, hey, what it costs me to incorporate and I save that much in my taxes, we encourage our agents to incorporate. Because what it does for you guys is it will inherently force you to be more organized. Okay, it's gonna discipline yourself in the financial arena of your business, and you're going to learn to actually treat your real estate business like a business. All right? We make raise your right hand. Okay? I state your name.
State your name.
Okay? I knew that was coming. You guys, okay? All right? Am CEO of Me Inc. That is, you are running your own business. I don't care if you're under a broker or not under a broker, if you have your own brokerage or desire to have your own brokerage or whatever the case may be, all right? You are still in business for yourself, right? Okay, and with that in mind, you need to run that business like a business. Treat it with the respect that it should have. All right, it's just like if you are, and treat yourself as an employee of that business. And one of the questions we learn to ask ourselves, if I were my own CEO, which I am, would I fire me? All right, based upon the activity I did today. right? Well, if I look back, if I had an employee that was paying 100 grand a year, would I say, hey, look, man, you're not giving me 100 grand worth of value here, right? And so it's a good question to ask to the person in the mirror as you go about. So, all right. It's not necessarily about the legal protection. Okay, typical agents, everybody right here, nobody's incorporated, so here's the way you are currently filing your taxes. You are paid a 1099 at the end of the year. You take that 1099 to your tax professional or you do it yourself. That 1099 feeds to the top line of what's called a Schedule C. It's a ordinary business, all right? That's a Schedule C to your filing, all right? Schedule C income, that's what a 1099 is. It feeds up to the top line. And all a Schedule C is, if you look through it, is a profit and loss statement. You take the profit you made, okay, or the gross income, you start deducting expenses, and you're left with a net income. That net income on Schedule C, it's very clear, by the way, it's not, rocket science to do your own taxes per se, all right? Trust me, look at the people that sit in the little booths at Walmart that are the experts, okay, that got trained yesterday to do your taxes. All right, and tell me that it's, okay, it's just software that they start putting numbers in, right? And so with that in mind, if you look at Schedule C, it feeds down and gives you a net operating income and say, here's your gain from your real estate business. Please put this on line 378 of your 1040. Oh, okay, so you go to your 1040 and that feeds over to there. So it all feeds to your 1040. This Schedule C income is the way you're currently doing it. Not a bad way, nothing wrong with it, it's just, it is what it is. You still have the ability in that Schedule C to deduct all legitimate business expenses, right? So already you're deducting your board dues and your MLS fees and your taking a car allowance or doing your mileage, whatever method you choose to do. You're writing off your signs, all your advertising, your business cards. People say, well, your broker split, but in reality is if you're getting a 1099, that 1099 is already net of your broker split, right? Your broker gives you a 1099 for the amount that they paid you. Right? So you made 100, they took 30, you're left with 70, they gave you a 1099 for 70, not for the 100, so you don't have to write off the 30 that you quote unquote paid them, all right? You're only getting the 1099 for the 70 to begin with. But all this other stuff that are legitimate business expenses, and I say legitimate business, all those things I just named, receipts lying on the ground, okay, maybe well, you know what? That might be an expense for me. Okay, you know what I mean? Whatever it is, whatever your legitimate business expenses are to try and lower your taxable income, right? And you get it down to as low as you possibly can. So you took that 70, wrote off $30,000 worth of expenses, and you're left with $40,000. All right? Fine. Now, the problem there is that the net income, all right, after you do is subject to not only income tax, which is fine. By the way, I told you I'm going to do about tax savings. I'm not going to show you how to save money on your income tax. Whether you're incorporated or a 1099 Schedule C filer like you are now, you are still going to pay income tax. What I'm going to show you how to do is to minimize, alleviate, reduce the amount you contribute to FICA. FICA is Social Security and Medicare, right? This Social Security and Medicare is the thing that always kicked me in the teeth. Okay, it bit me in the backside because I tried to at least quasi-plan in my head and make some quarterly payments if I had some money left over. If not, I'm like, I'll deal with that in April. Not really, I'll deal with it in October because we all file extensions. All right, and we all know that. Right? The tax day for a realtor is not April 15th, it's October 15th. We all know that, right? Because April 15th is just the day I'm supposed to file the extension. All right, and then October 15th is when it's really due, right? Because we all owe taxes because we forget we're not disciplined enough to pay our taxes as we go. This is going to help with all of that. Watch. It's kind of cool. But what happened is this. Okay, quick little history on Social Security FICA. Okay, FICA is the Federal Income Contribution Act or whatever it is. It was 1935. Franklin Delano Roosevelt were in the middle of a depression. All right. Middle of the Depression, and we've got people out of work, and we've got to figure out ways to get more people in the workforce and get, quite frankly, an older workforce out of the workforce. All right? So he says, all right, what if we bribe them out of the workforce? Well, how do we do that? Well, we tell them we're going to pay them to retire. Fair enough. So this group, okay, you're going to retire, and this new group is going to come in and start taking those jobs that you were doing. And what we're going to do is we're just going to start taking out 7.65% of their salary, all right? And that's going to be matched by the employer, who's also going to kick in 7.65% for a total of 15.3%. It's broken down to roughly just under 2.5% of that 15.3 is Medicare. The other remaining portion, that would be 13.8, is Social Security. All right. Again, split half and half between the employee and the employer, and we're going to do that, and we're going to use that money to pay the retirees who retired now in 1935. All right. So we're taking new money coming in to pay off the old investors. Again, we joke that if Bernie Madoff does it, we throw him in jail because it's called a Ponzi scheme. But if the government does it, it's a grand idea. All right. Okay. So Social Security is nothing but a Ponzi scheme. All right. Where we're taking money that's coming in from today's workers, and hopefully we have enough of them to pay off the people that we promised to pay over the last 40 years that have been paying into the system. All right. Are you with me? Mm-hmm. So with that in mind, okay, you guys get that little yearly annual thing that tells you, hey, you've contributed so much into Social Security, all right, and there's how much if you retired at 62, if you retired at 65, here's how much your monthly you can expect to get monthly, if yada yada yada. Okay, first of all, we got to hope that it's going to be there. All right. Problem is this. All right. You know why they chose 62 in 1935 when they chose 62 as the retirement age?
Because people were dead.
Yeah, because the average life expectancy was 61. Okay? All right? So the goal is, hey, look, you know what? You can pay in and hopefully you'll die before we have to start paying this out. All right? Or the odds are the averages say that more than half of you will die. Now, what's happening is we're eating healthier because I'm not bringing bagels and donuts to these meetings. I'm bringing bananas and apples, right? And we're starting to eat healthier and we're living longer and we're outliving Social Security. All right? It's just not, we got more older people than we ever have before that are, living beyond the quote-unquote life expectancy, and the Ponzi scheme's starting to fall apart. All right? So whether or not it's the third rail of politics, nobody's supposed to touch it because you'll never win Florida if you talk about Social Security reform. All right? I get that. All right? And so, but the reality is you got to have a discussion at least with people under 50, right? To say, hey, you know what? Or 55. I'm not under 50 anymore, so I'll include myself in the group. All right, so under 55. All right, so that we can say, hey, look, we got to do something, right? Whether it be, we got to do something because it's just not, stable. Because plus, it was supposed to be put in a lockbox, never to be touched, not supposed to be commingled with the general fund. Well, guess what? They're building our highways with our Social Security contributions. Trust me. All right, and so it's just, it's just not working, right? And so for me, it kicked me in the teeth. Here's what happens. So with that 7.6, by the way, oh, that's great. My employer's paying half of my Social Security. Question. As an employer, all right, do you think I bake the 7.65 that I have to pay an employee into how much I'm willing to pay my employee? Absolutely. I've got independent contractors and I've got employees, right? If I have a discussion with somebody, and the IRS is very clear on when I have to call them an employee, when I can call them an independent contractor, because my preference is to pay everybody as an independent contractor. Deal with your own taxes, have a great day. All right, I'm not your employer, you're just an independent contractor. Well, the IRS says, well, hang on now. All right, you told them where they had to be, you told them when they had to be there, gave them specific instructions of what they had to do and this, that, and the other. That's not an independent contractor, that's an employee. So got to be very careful, in that. So I've got some people that do our file compliance at our office, for instance, and I will have a discussion with them. Hey, look, I need you in the office. I need you here these days, so I'm going to call you an employee, and I'm going to pay you here's what I pay my independent contractors. I'm going to pay you less. All right? Why? Because I have to then kick in 7.65%, all right, on top of what I pay you to match your Social Security contribution. All right? So it's all baked in, right? So people say, oh, well, it's great. The employer pays, all right? It's all baked in. The end of the line consumer always pays. 5-cent gasoline tax. Let's raise it. Great. My cost of my lettuce just went up. Why? Because the consumer always pays. right? At the end of the day, all right, it costs more money to get the lettuce to the grocery store because of the 5-cent gas tax. So guess what? It's going to be rolled into all of that, right? So anyway, this kicked me in the teeth because I always try to set aside money, right? That you know what? I got my taxes. I got to remember, don't forget taxes. Because nobody was taken out of my check, right? We come from an employee mentality where they, you know what? It just, well, I got money back every year. What? That was great. Well, they took a lot of money out. You just didn't realize it because we become a net check mentality. Government likes that too. They like the fact that if you had to actually write the check to them every week or every pay period, all right, you might think a little bit differently about your taxes. But hey, how much do you make? $400 a week. No. How much do you gross? I don't know. I bring home $400 a week. What? But how much? I don't know. I bring home $400 a week. All right, and they're dumbing us down, right? They don't want us to pay attention to all what those little 4-8 boxes on my paycheck. Hey, what? How come the lines keep getting more? All right, and I keep, you know,
Direct deposit.
What's that?
Even worse when you have direct deposit.
Right.
You're not even looking at the.
You don't even see the pay stub anymore, right? Exactly. It just goes in, and that's just what I expect, and here it is, and you know what I mean? So they kind of like that. Now, when becoming a business owner, right, like you guys all are, because we raised our right hand, right, and said we were, all right? When we become a business owner, now we have to start paying attention to that stuff and start making plans to pay or have that money set aside to pay those taxes, right? So I set aside for income tax, and every year what happens is this. When you are self-employed, you are both employee and employer. So guess what? There's nobody paying half of your FICA for you anymore. You get to pay the whole 15.3. So, and it can be significant. Let's say you got a gross or a net income of 50 grand. After you wrote off your expenses, you had $50,000 and you forgot about the 15.3%. Well, guess what? Forgetting about it means that's $7,500. All right? That's enough money to make a difference, right? And so how do we legally take a look at minimizing, without raising audit concerns, our amount that we're obligated to pay toward FICA? And that's where I can't help. I can't help with income tax, all right? That's all based upon how you vote, all right? And what I can help with is it's true, right? Okay, there's two different tax plans. Read them, all right? Okay, but what I can't help with is FICA, but they both have 15. Neither candidate is going to do anything with this 15.3%. All right, it's there. So if we can minimize how much we're exposing to that 15.3%, there's where I can help. All right? So that's what we're going to do. Easiest way to file. By the way, these 1099 people, Schedule C, it's a one page. Your Schedule C is one page. Your whole business tax return is on one page. It's Schedule C. Here's my gross income. Here are my expenses. Here's my net income. Boom. I'm done. All right? Only a Schedule C attached to your personal return. Now, the incorporated agent, all right? This is where we all are headed toward, right? The incorporated agent is going to take a salary. You're going to set up a corporation, all right? Here's the broad picture. You're going to set up a corporation. Your corporation is going to pay you a salary, all right? So, Ashland Silver, PLLC, all right, is going to pay Ashland Silver a monthly salary. Then, the remainder of that income that was not salary is still going to be distributed to Ashland Silver, because Ashland's also the sole shareholder of Ashland Silver, PLLC, right? So she, at the end of the year, gets a K1, which is a shareholder distribution, all right, from a corporation. And the beauty of doing it this way is you still have the ability to deduct all your expenses. There's no additional expenses other than the cost of incorporating you get to deduct. Okay, there's no inherent new expenses that you have. But the net income is still subject to income tax. I told you I can't help you with that, all right? Except for the way you vote, all right? And only your salary, though, the salary that Ashland Silver PLLC paid Ashland Silver, the salary is subject to that 15.3%. The remainder is distributed to her in a K1, right? That's that shareholder distribution that is still subject to income tax, but not subject to FICA. Okay? That, my friends, right there is the beauty of the incorporation. We're going to go through some numbers to show you an example of how this might look. But I'm telling you, that makes a big difference. Remember on the little video I told you I saved 11 grand my first year? I did, all right? Because I started taking a $18,000 a year salary, all right? And so I was paying FICA on $18,000 a year. Now here's the other thing about FICA. FICA, the Social Security portion of FICA, caps. Meaning once you hit a certain level of income, you stop having to contribute for that year, all right? It used to be in the 90,000 range. I think it's up to 122 now as of last year. It's up to 122,000. The Medicare portion of FICA, which I told you broke it up into Social Security and Medicare, that never goes away. Matter of fact, once you get to certain income levels, not only does it not go away, but it increases again. All right, they say, well, guess what? All right, you've been, shame on you, too successful, you need to pay more. All right, okay. Costs associated with incorporating, so we got to make sure that this makes sense. We don't want to incorporate for the sake of incorporating, other than the fact that if it's forcing you to be disciplined and actually look at your finances on a more consistent basis than once every year when you bring a big shoebox full of receipts to your tax guy, all right, or gal. We're going to do it a lot more often. We have a phrase in our 100K. We talk about weeding ourselves daily, all right, which means we're going to consistently weed our lawn. For those what's that?
You can vote on that too.
Well, yeah, in Colorado you can vote on that. Can I weed myself daily? Right on. I'm in. All right, I'm all about weed myself daily. Man, totally new dimension in Colorado. All right. All right. That's right, and that is on the ballot. Medicinal, right? It's all medicinal here in Florida. That's right. Exactly. I got glaucoma, dude. All right. I promise. That's right. Got glaucoma and the munchies. So. I'm so glad I went to college before social media was around. I mean, again, it's bad enough that I'm going to have this stuff floating around. If you can imagine the stuff I did when I was 19, holy smokes. God bless 19-year-olds today. All right. Anyway, there are costs associated with incorporating, so we're going to make sure it makes sense for us to do it. All right. There's some monthly or quarterly payroll accounting that needs to be done. All right, that we're going to account for to make sure it gets done, because there's some forms that all of a sudden that you aren't having to do right now if you're not incorporated. And you also have to, in addition to your personal tax return, you're going to have to do an annual corporate tax return. All right? So I encourage you to have an accountant do that corporate tax return. Most of the time you can do your own personal income tax return. All right? Right now. Again, the reason is because look at the people who are actually doing it. All right, you're smarter than they are, so why pay somebody? All right, you can figure that out. I encourage you to have someone do your corporate tax return, because the corporate tax return involves a balance sheet, and that's where most people get screwed up. If you don't have an accounting degree, that's where things start getting hairy. I have retained earnings, that, and this, that, and these, okay, that's why you need somebody to do it. All right, but we're going to roll all that in to see it. And there are also some annual state filing fees. Basically costs about $150 a year to maintain your corporation, all right, with the state, all right? Okay, here's a real life example. This is where rubber meets the road. Okay, we've got an agent that nets $60K in commissions. Maybe they grossed 90, right? Wrote off $30,000 of expenses between their advertising, their MLS dues, and all their automobile expense, all that stuff. So they wrote off $30,000 of expenses and was left currently on their Schedule C with 60 grand at the bottom, right? 90 minus equals 60. All right, you with me so far? That Schedule C agent's going to pay income tax on 55K, and we'll get in here. Don't get too hung up on that. The reason they only have to pay income tax on 55 is because, remember, I told you they're going to pay half of the FICA, right? Okay, they're going to pay the whole FICA. Half of it is quote unquote as the employer, and half of it is the employee. So they get to write off the employee portion of that they wrote. So they write that off of that. So half of that goes to there. Needless to say, they have to pay income tax on essentially all their earnings, but they're also going to pay 15.3% or $9,180 of that 60 to go to FICA. Remember I told you that's where the thing had kicked me in the teeth? All right, I thought I had my income taxes covered, and I did most of the time. And then all of a sudden I go, how in the world? I got this, I'm not gonna owe. And the guy comes back to me and says, oh, all right, I was doing it myself. I get to the calculations. Okay, you owe $9,000. I was like, what in the world? How, Wednesday, Thursday, Friday, all right? WTF, all right? How did that happen? Where did I get to I'm owing $9 grand all of a sudden. It was because of this FICA, right? Always kicked me in the teeth. the incorporated agent, let's say that same agent decided, okay, we'll just use Ashlyn because I know her name and she's right there in the front row. So Ashlyn says, I'm tired of this.
I am.
Okay, you are, okay? And so I'm going to take Ashlyn Silver, and we're going to talk about what do we name our corporation. There are a couple of options you have, very limited in our real estate business because we have licensure law that we have to follow as well, all right? So Ashlyn Silver, PLLC, she said I incorporated, and out of that 60, she said I paid myself a salary of 24 grand this year. She decided to start taking 2 grand. Now I'll get to the question of, hey Bob, I need more than 2 grand a month to live. All right, what happens there? We'll talk about that. It's okay, all right? First question was out of my mouth when someone started explaining that to me, all right? So 24 grand, that incorporated agent is going to pay income tax on the whole 60. Can't get away from it, all right? It is what it is, all right? Income tax I can't change, all right? But only pays FICA of $3,672, all right? Which is 15.3% of the 24K. Are you with me? Yeah.
If the incorporated business pays income tax on the 60K.
Yep.
As an employee
Yep.
of my own business, I pay income tax on the salary?
Well, the corporation doesn't pay income tax.
Oh, it doesn't?
No. Because we are an S Corp. Okay, write that down too. Okay, we'll talk about that more. But you're going to be an S Corp. All right, and the only difference in a C and an S Corp, the C and an S Corp is an IRS election. All right, it's the way you want to be treated by the IRS. S Corps are designed specifically for small businesses, and they're what's called a pass-through. I told you at the end of the year, all the profits of the corporation are distributed to the shareholders. Okay, so it becomes they start the next year with a clean set of books. All right. So because of that, your corporation doesn't pay taxes, but anybody who got a salary from it would through their own thing, and anybody who got a shareholder distribution would. All right, so they would pay their own taxes in that. Good question. And by the way, we don't want to, because C Corp. When you hear Hillary and Trump talking about raising or lowering corporate taxes, that's not this. All right, they're talking about C Corps. Because corporations are considered entities as well, and they pay tax on their profits as well. Okay, that's the corporate income tax. All right, so fair enough. Good question though. All right, so you see the difference here. Basically, what's that? That $5,500. All right, in these two scenarios that they saved in FICA alone. Okay. Now, next question in my mouth when someone finally explained this to me was, well, what if I took a lower salary, right? How low can we go, right? Okay, because I started to get the idea. It's like, wow, a lower salary means I pay FICA on less, all right? And I could save even more money. Here's my own personal example. I'll be free and open to tell you this. By the time I incorporated, I was beyond capping FICA, all right? So I was Schedule C, I was making enough money even after I wrote off all my expenses, and I wrote them off. All right, everything I could find and then some, right? I was writing everything I could. I still was capping FICA, and by capping FICA, let's say it was 100 grand at the time, all right? So I was paying $15,300 for all intents and purposes, a little bit more actually because Medicare never caps, but let's just make it easy. I was paying $15,300 in FICA. I started taking a salary of 18 grand a year, all right? So instead of paying FICA on 100, I started paying FICA on 18. That difference of 82,000, do the math, 15.3% of 82,000, over 12 grand, all right, that I was saving annually. Now again, Social Security Medicare is designed to be a pay-in, take-out scenario, all right? So people say to me, but Bob, you were paying less into Social Security, all right? So that means when you do retire, you were going to be able to draw less out. I said, I get that. I trust me, then I trust the government. Okay, I do. Okay, and so I said, I'm going to take that 12 grand and go buy some investment property. I'm going to self-retire. Thank you very much. I appreciate it. All right, I got this. I appreciate your willingness. All right. Now, the problem is, not everybody can be self-employed, because if we did that, the Ponzi scheme would really fall apart, right? Because any people paying into this Ponzi scheme, I just said, hey, look, if I can legally not pay into the Ponzi, all right, how can I do this? Now, I've talked to my tax accountant and for years and years. I've been audited, but never specifically on the portion that I took as a salary. They just said, did you take a salary? Yep, here's my salary. Because guess what? Your corporation, all right, Ashland Silver PLLC, the corporation at the end of the year gives Ashland Silver a W-2 because she's an employee of her corporation. So she, you can prove that, hey, here's my W-2. I paid my employee, my sole employee, me. Okay, I paid me, all right, 18 grand, and I had a W-2 that reflected that. And out of that 18 grand, I still had Social Security and Medicare taken out every month. I had a portion of income tax taken out was it enough to cover the whole income tax for all my profit? No, it was enough to cover that 18 grand, all right? But then I had to figure in more that I was gonna maybe have to pay in to cover the remainder of the income tax, not the FICA. Are you with me? Everybody cover me so far? Okay, good. All right, so the lower you go, the better. This is where you have to have a meeting with your tax person and say, okay, where's the comfort level and where you are? Because again, the lower salary you take, the more money you save. All right, my guy has told me that anybody that's ever been brought up on this, all right, has never, because the IRS tax code says that you're supposed to take a reasonable salary. Okay, it's pretty vague. Right? Define reasonable. What's reasonable to me is not reasonable to you, right? And so, that's a matter of opinion, Mr. IRS guy. And so we have to have that type of discussion. The people who get in trouble are the people that try and go with zero salary, right? I want all my income going to a K1, so I'm paying zero. All right, that's when you really get in trouble. A couple years back, was it 2000? When did 2004? Is that when Kerry ran, John Kerry? And he had John Edwards as his running mate? Okay. John Edwards got in trouble for this a little bit, and even though I don't believe with John Edwards politically, I was like, right on, dude, because I heard what he was doing. I said, that's exactly what I teach, right? Because here's what he did. He was like a successful trial attorney in North Carolina, right? Made like $6 million, and he took a salary of $350 grand, right? Why? Because he was doing this, right? He was manipulating the system, just like, hey, it's there, go for it, all right? I'm with you, bro, Where he got into trouble, though, is that when you're running for office, he's on the campaign, trail, railing against, Medicare being underfunded. Medicare, we need more money into Medicare. And they're like, hey, John, why'd you take a salary of $350? Oh, so I don't have to pay into Medicare. Okay, right? But it's there, it's on the books, and that's where he kind of got the, the forked tongue, he's got caught, saying two things. But on the surface, there was nothing illegal about it, and it was a legitimate, tactic to make. And by the way, when you take a salary of $350, at least that's, a significant salary, right? And he was capping Social Security, and you say, well, he was capped, but he didn't cap FICA, because remember, Medicare never caps, and that's where he got into trouble having that discussion. So, all that being said, the lower salary you take, the more savings you get. All right, you with me so far with how the math works out? So the incorporated agent pays $5,508 less in this scenario, and would have paid even less, all right, if Ashland had decided to take an $18,000 a year salary instead of $24,000. If she decided to take a $12,000 a year salary instead of $24,000, she would have saved even more money in that scenario. All right, got it? Yeah. Okay. Now, the incorporated agent has expenses, okay, that the non-incorporated, we'll call them the 1099 person doesn't. All right. The cost of incorporating is about $100. I've got a guy here that will incorporate. It's more. He'll charge like $500 if you want to go to him, but you get a nice little book and you get this little. The first time I did it, you get a seal that you stamp things with or whatever. You don't need it. All right. You can do it. Go online, sunbiz.org. All right. You can incorporate, and by the time I'm done with this slide, you can be incorporated. Okay. I'm just telling you. All right. You can pay your fee. It's what they want. All right. You make sure your name's available, and you should, the corporation name. We'll talk about that. Don't incorporate seriously before we're done until I get to what you're supposed to call your corporation. All right, don't go online right now. Okay, hang on. Okay, all right. Cost of incorporating is about $100. Corporate bank account, because you have to have a separate bank account for your corporation. Okay, go to most banks, and if they don't offer it, say, you know what, there are other banks that will, and all of a sudden they'll find one in their drawer that has a zero fee. Oh no, every bank account we have has $35 a month mandatory fee. Really? Fifth Third? Oh, you know what? Okay. You know what? We did find one here at Regents, all right, or wherever you are. All right, just go. You'll find one that has a corporate bank account. Okay. You want to keep the money separate, right? So quarterly payroll, this is not how much you're paying into your quarterly payroll. This is the cost of paying someone to do your, I paid a guy $75 because, again, how often do you have to do payroll reports? It depends on how much you pay yourself, right? The lower amount you pay yourself, the government has thresholds on how often you have to file payroll reports, okay? It's, you can look it up or whatever. If it's between 0 and 100,000, it's annually, it's every quarter. If it gets above that, then you have to do it more often every month. And if it gets above that, you have to do it every pay period if it's, semi-monthly or whatever the case may be. So they have rules on how often you have to do it. If you're going to be a single employee of your corporation, which most of you would be, I think for 70, because all they do, you just don't want to be hassled with it. There are these forms that will show up. They're 941s. You got to figure out it's for state disability and all this kind of stuff. For $75, they do it all day long. It's software. My people people I use, they just have access to an EFTS, which basically takes the money out of my corporate bank account, pays it for me, says, Bob, hey, just so you know, $9.42 is going to come out on such and such a date. Make the journal entry on your, QuickBooks to reflect that. And by the way, I need you to sign this. They send me little sticky sign here things. I sign them, pop it in the mail, and I'm done. It's worth every penny of $75 the pay period for me having to try and figure out that stuff. All right. And at the end of the year, they also give me a W-2. Okay, from my corporation to me. All right, it gives me a W-2. So you can find that. Yeah, Todd Unbehagen is a good guy. And check with him, beat him up on price a little bit, you might have to. All right, tell him either FHR?
That was somebody else.
Okay.
From that company.
Oh, probably Conan?
Yes.
Yeah, okay, they're in the same group, all right, yeah. They're good. Look around if you have it. Todd's a good guy. The reason I like Todd probably does about 150 to 200 of our agents in corporations. And again, no remuneration to me. He's just a good guy. He understands the real estate business. If you also have investment properties, he's a good guy because he understands the intricacies of owning investment real estate and the things you can finagle there. So he's a really good guy. If you want his number, it's spelled as Unbehagen, Unbehagen, and it's 727-934-7759. 934-7759. Good guy. All right. So factor in about $300 a year for your payroll accounting, if you will. Corporate return. Okay. At the end of the year, remember I told you have to have a corporate tax return. Probably run you about $500 to have somebody legitimately do this. Here's the beauty, guys. We're going to weed ourselves daily. All right. What we're going to do is, quite frankly, every year, my corporate tax return or the stuff I have to provide my accountant to do my corporate tax return is ready at 12:01 on January 1st. If I want to push a button on my QuickBooks, right? It's not this shoe, you know why? The whole shoebox full of receipts and all that other kind of garbage and all that stuff, I did it along the way. Every time I entered something into my QuickBooks, I coded it to its proper account. When you do that, there's another saying we have in 100K, right? There is freedom in structure, right? That if we begin to structure ourselves, it becomes very freeing, right? And if we can learn, by the way, you're probably going to, if you don't have QuickBooks or something like it yet, I run my whole business on QuickBooks still, all right? QuickBooks is easy, all right? It's incredible once you learn to utilize it and you can see the data. And if you're putting the good data in, then at any moment, man, I can run a report that says, how much did I spend on recruiting and training in the third quarter of 2016 versus the third quarter of 2015? Boom, the report's there. You're running your business like a business, right? All of a sudden you have less profit than you thought this month. You're like, what happened? I had more commissions, right? And you go back and sure enough, I did. Hey, what the heck? All right? Where'd this expense come? Oops, right? But at least what we do is we oops in April or October of the following year, and it's too late to correct 2015 in October of 2016, right? Can't make it. But if I look at it at least on a monthly basis, I can say, oh, you know what? I need to tweak it, man. I got to rein myself in, tighten the belt a little bit, all right? All those client lunches I need to slow it down.
It's like your slide of like going to the moon or whatever, like the.
Yeah, right, exactly. It's a trip to the moon. That's our version of Weed Yourself Daily. We also call it a trip to the moon, right? We're going to make a series of small adjustments along the way. It's way easier to make than one massive adjustment at the end. All right? And Weed Yourself Daily, by the way, you guys, it just comes from my two neighbors. One who does weed his thing daily when he goes out and checks his mail, and he gets to weed with his finger and his thumb. He picks his weeds, 2 weeds, and he's done. All right. The other neighbor who ignores it for a whole year and is out there swearing because it takes him a day and a half with a backhoe, all right, to weed his thing. I'd rather, if I'm disciplined enough, I'd like to weed like this. Once it's clean, keep it clean, right? It's a lot easier to maintain than it is to get it back. You just ignore it for a year and then come back and try and redo it, right? So, corporate return costs you about $500 a year.
All of those things are tax deductible, yes?
Yeah, absolutely. These are coming off your income tax anyway, right? These are legitimate business expenses, right? And you're going to have state fees about $150 a year ongoing. We talked about that to maintain your, you get this little postcard in the mail that says you have to be renewed after January 1st. It has to be done by May 1st. If it's that, by the way, don't miss that, because if you miss it by May 1st, it becomes like $450. It goes from $150 to $450 in a hurry, all right? So just, you can do it all online and file it, all right? Annual total of all that's about $1,050. All right. So if we're not going to save $1,050 in FICA, don't incorporate. Okay, it doesn't make sense, right? We're not going to, do it other than the fact that you can become, But it wouldn't take much to save $1,000 in FICA. All right, it really wouldn't. It's only about $7,500 worth of income. Saves you, $1,050 at 15.3%. Will save you that $1,050. All right, so it doesn't take much to get there. Now, that's the whole concept, right? So remember, Ashland Silver PLLC is going to pay Ashland Silver a monthly salary, right? The monthly salary is whatever level she decides to take it at. But that portion she takes in salary is going to be subject to FICA. The remaining portion of her profit is going to be distributed to the Ashland Silver PLLC shareholders. Could be a sole shareholder corporation, could be you and a spouse, could be you and a child, could be you and whatever you want to do it, right? But the shareholders distribute it. That income goes to their tax return as well, and it still is paid taxes, income taxes, but it's not subject to the FICA. Got it? It's the whole ball of wax. With me? Okay, what if I need more than my salary to live? All right, I told you I was taking $1,500 a month, 18 grand a year, right? I needed more than that to live. What happened? No problem. I still have access to all that money. Here's what we talked. Remember when we set up our QuickBooks? All right. Ashland has Ashland Silver PLLC. All right. She has her QuickBooks set up. All her commissions are paid to Ashland Silver PLLC. Okay. She takes a portion of that and pays herself a salary. She also pays all her legitimate business expenses out of that, coding them properly along the way. That was utilities. That was automobile expense. That was advertising expense. That was, you know what I mean? So you went through and you coded it all as you did it. Even if you have it on a credit card, by the way, you have one credit card for the corporation. Doesn't have to have, you can be your corporate account, even though it doesn't say your corporate name on it. It can just be the one you use for your corporation, right? You get it in there. When you have 42 items on there that add up to $6 grand for the month, right? You're going to say, well, I'm just going to write it off to credit card expense. No. You take it and you say, okay, that one, what was that? Oh, that was advertising. What was that? Oh, that. And so you get down and say, out of that $6 grand, $1,500 was advertising, another $1,000 was automobile expense, another that, so it adds up to the $6 grand, but it's already properly coded. So when you run that report, it's going to be properly in its proper file, if you will. All right. Again, QuickBooks is a very simple thing to do once you set it up properly. All right. Okay. What's that? Lots of proper. Yeah, exactly. Now, here's the other thing. What if, though, I decided to pay for my kids' tennis shoes on that corporate card or out of this corporate expense because the $1,500 I took wasn't enough, right? I can, but here's how I label that. I code it differently. I don't code it as a legitimate expense. I code it as a shareholder distribution. So I've taken the money along the way. Okay, so in our scenario, remember we had 60 grand of profit, 24 of salary, so that 36,000 gap, right? I can take that along the way. I just have to code it to shareholder distribution. Hey, I'm taking some of the money now, taking some of the money now, taking some of the money now. All right? You're just doing that every step along the way, so at the end of the day, it's all properly accounted for, right? Whether legitimate expenses or shareholder distributions. Fair enough? So you just have to code them, and again, code whatever you want, but if you do code it to shareholder, or if you code it to an expense, you better be able to defend that in an audit. That's the goal, right? Is that if, hey, look, that was an expense, all right, so share with me why your child's tennis shoes were a legitimate business expense. Okay? All right, it's fine. If you got an answer for it, great. Trust me, I've been there, and I've got answers for just about everything.
Hang door hangers.
That's right. Okay, thank you very. I love it. That's the thinking we like. Come on, I want to hear it. Keep coming. Give me some more ideas. All right, that's okay. But I'm just saying it has to be defensible, or, well, it doesn't have to be defensible until it has to be defensible. Right? Okay, it doesn't have to be defensible until the time that you get a letter with a pink envelope on it from the IRS. All right, that says, hey, we got to talk. All right, now it's got time to be defensible, right? So just be prepared to do whatever you need to do, but you can use it along the way. Isn't the accounting and paperwork a nightmare? The reality is we should be tracking this stuff anyway, all right? Right now, I am telling you, if you did not incorporate, took nothing else away, I'm going to leave myself as a 1099, Bob, but I'm going to go get QuickBooks and do it, then you win. Because what's going to happen is at the end of the year, you're going to hit a button and your business, your Schedule C is done. All right, if you're 1099. Okay? And the only reason we're going to pay somebody to do our corporate tax returns is because that balance sheet thing I talked about. All right, that most people don't understand and they get it screwed up, and that triggers a lot of audits when their balance sheet gets all out of whack. All right, because you have to turn in a balance sheet every year on your corporate tax return. All right? All right, more questions. I already have a corporation. Can I use that? Okay, more than likely, no. Okay? The reason is because in addition to, a corporation is a corporation. If it was available through Sunbiz, you could do it, right? Problem is that as real estate agents, we have DBPR to deal with as well. All right, we have a regulatory board that governs our licensure, and a broker can only pay a licensed entity, right? So we buy houses and fix them up, Inc. Great name. I can't pay a commission to it. Right? I'm off the shizzle for hizzle, my nizzle, all right, .com, Inc., all right? Okay? I can't pay a commission to it because it's not licensed, all right? Because you can get that. It's probably available. Is that available? Somebody check. Okay? All right? I'm just saying I can only pay, now, and DBPR, Jim, confirm this for me, all right? PA still available, right? Your name, comma, PA, your name, comma, LLC, your name, comma, PLLC.
So limited liability corporation, what is PA?
PA is Professional Association.
Okay, what's PLLC?
Professional Limited Liability Corporation. They're really, talk to your person, all right? I'm seeing a lot more PLLCs all of a sudden. They weren't around when I was doing it. All right.
There's also a PL.
A PL, professional.
If you guys want to figure that out, because you have to, after you incorporate, you have to add it to your license. And you have to do that with a form called, it's a DBPR RE16.
RE16, okay, so once you...
All of them are listed there.
All right, and they're listed on that RE16?
Yeah.
Okay, perfect. So the RE16 through DBPR will tell you all the legitimate allowable things. Now, agents come to us and they come with the little printed out sheet from Sunbiz and says, hey, guys, we incorporated, so I want my commissions paid there. I say, great, show me your license. You have to go RE16 yourself, all right?
It's like 30 bucks.
Okay, all right, so yeah, so you send us RE16, it usually takes them about 3 weeks or so.
Most, yeah.
Yeah.
2 to 3 weeks.
2 to 3 weeks, they get it back, and we don't need to actually see it ourselves. We don't need to see it. We just need to be able to go on the DBPR site and verify that now it says Ashland Silver, PLLC, whatever you call yourself, and that now that you're there, your broker can then legally pay that entity a commission. And the reason the DBPR does this, just for FYI, is because they don't want real tricky names as your corporations, because they still want the public to be able to research you, find out who your broker is if they have a complaint. That's what it really boils down to. All right, they want to be able to hunt you down, find out that you're not trying to hide behind some corporate veil, right? That, hey, look, all right, I'm Deanne Inc., all right, or Deanne LLC, all right, that's the same Deanne who passed the test. All right, is basically what they want to know. Fair enough? Okay. What's the break-even point in incorporating pays for itself? Again, it depends how aggressive you are on the salary, because the lower salary, you save more money the fastest. All right, but I'd say even as low as a $25,000 to $30,000 net income. I mean, after you pay off your expenses, and you took a $7,000 salary. All right, the difference between $25,000 and $7,000 is 18 grand at 15.3% is still significant enough. It covers your expenses for sure. All right, and makes you do it, and it just gets better after that. Right, the more you do. All right. Can I choose my own fiscal year? You can. My suggestion is because make it January 1st through December 31st. All right. Keep it consistent with your tax year. All right. Because there are companies, and they have logic behind it. They're big companies, why their fiscal years are October through September or whatever. But then you've got portions of years in your fiscal year being attributed to different tax years. And so for me, I always did it. And that's why I like to teach this class in November. Today's only November 2nd. You've got a full 58 days, right, to get this squared away. My goal for you is that you hit the ground running come January 1st, that you're incorporated, your license now says it. You can start with a fresh set of books January 1st, and let's just start that new year off getting it done.
And if you started in January, of course, that's for the next year. It wouldn't be for this.
Would not be for 2016, no, exactly. It'd be all, and by the way, even if you did it, let's say we taught this class in July and say, well, let me go do it right now. Can you retroactivate all my income? I can't, right? Okay, so agents that incorporate during the middle of the year for us, they get a 1099 from us for the portion that we paid them as a Schedule C person. By the way, as if you're with Future Home, once you incorporate, you no longer get a 1099. All right, because a corporation does not have to 1099 another corporation. All right, so people say, well, how do I know how much money I made? Well, Mr. Business Owner, all right, okay, you're supposed to know that from looking at your profit and loss little button you push on QuickBooks that says how much money you made, right? Oh, got it. By the way, if you ever why do they do that? Well, I don't think, doesn't the IRS care? They don't. You know why? Because you can't cash a check made out to Ashland Silver PLLC. You can only deposit that check. You can't even less cash from that check when you deposit it. You can deposit it into the whole thing and then simultaneously do a withdrawal from that account, but there are two transactions, so if you ever get audited, trust me, I know, all right, the first thing they're gonna ask for is, I'd like to take a look at your bank statements. Hey, Mr. McDougall, see here it says $180,000 of gross income, to start with, but I just added up all your deposits in your bank statements, and there's $315,000. Oh, wow, really? Holy. Jeanette's been asking me where that money's gone on myself. If you find it, let me know. It'd probably help me get back into my own master bedroom instead of sleeping in the guest room. All right, that'd be a great thing. All right, help me out here, right? And so that's how they do it. They audit your bank statements because they know you can't cash what you're not supposed to. All right, I'm not sure. I've never gone to an AmScot because I, not allowed to carry my weapon here in the state of Florida. So the next time I'm available, then I'll go to AmScot since I'm, locked and loaded. But with that in mind, you ever seen those places? All right, you walking in there? I'm not going in at night. I'll tell you that. Okay. So, with that being said, you're not supposed to be able to cash these checks, so you can't just under the table your income anymore, right? And so they're going to have a paper trail through your bank statements is what's going to happen. Okay, fair enough. Are all accountants the same? Absolutely not. A lot of accountants don't even understand this. I had an agent who incorporated, and she had this accountant for years, and he kept insisting she needed to be a C Corp. It's like, you need to get a new accountant. I'm just telling you, you do not want to, because why? Now you're defeating the whole purpose. Now your corporation's paying corporate income tax. No. Right? S Corp, remember, salary, whatever's left over gets distributed to the shareholders through a K-1, which is just a IRS form called a K-1, which is a shareholder distribution. That portion is subject to income tax, all right, because it feeds right up to your 1040, but is not subject to the 15.3, and that's the whole it, right? But don't go to a C Corp, all right? So not all accountants. I gave you Todd's name. That's the only guy I recommend around here. I mean, feel free to check everybody else out. Go for it. I mean, check fees, all that stuff. I just know he's good. All right. Okay. And how many future home agents in here? Okay, majority of them, good, almost not. Okay, bigger question. Saving $11,000 plus a year sounds awesome. Do you have any other ways I could save more money, Bob? Okay, how about that? The easiest way is, okay, just join us. All right, if you're paying your broker more than $4,000 last year, shame on you. All right, okay. Even if you used to be with us, all right. Okay, then that's the easiest way to do it. And then we talk about earn more, keep more. We just have a lot of fun, by the way, if you can't tell. All right, we try and make
When you leave, you still love you.
Yeah, that's right. Absolutely. No harm, no foul. Exactly. Because the most you're worth to me is $4,000. Well, at the end of what's $4,000? Okay. You know what? That's the good news and bad news, right? Jack. Hey, I only have to pay $4,000. I'm only worth $4,000. It's actually the great equalizer because I got a $20 million producer and a brand new agent. Yeah, and the reality, you know what? No one gets extra special attention. Matter of fact, the $20 million producer cost me money. Because I still have to process all his files and all that kind of stuff after he caps, all right? I'm like, dude, would you just do your 16 deals and stop, please? All right, you're killing me, right? Okay, so the reality is it just becomes real good after that. So we have a lot of fun. We help you earn more money by training you. We help you keep more money by not taking it once we help you earn it. So that's the gist. Questions I can answer for you.
So how is Future Home Realty Incorporated to pay their agents? You know,
Yeah. I'm an S Corp. Okay, Future Home Realty Inc. I'm an S Corp, and my 1099s. Okay, I take out with 1099s. All right, so that doesn't even. I label every dollar I pay as commission dollar gets coded correctly, right? And so whatever's left over and all my expenses are coded. It's no different, really. Okay.
But you can have Future Home Realty, but you're not Bob McDougall.
Correct. I mean, I dissolved Robert McDougall, PA.
Okay.
Right, because if you start your own gig and your own thing, then you can just pay all your commissions can be paid to Ashland Silver Real Estate. Okay, group. All right,
The brokerages are registered with the DBPR.
Yeah.
So that you can pay money to it, but in fact, it's really what you're doing.
Right.
When we pay referral checks to other companies, we can pay them to whatever, Remax, whatever they are.
Right.
Lightning.
Right, exactly, because they're registered with DBPR, so we can pay them, right?
Okay.
And they're an entity. So and in your case, and if you have agents under you, then you pay them, and whatever's left over is just your profit, whether that came from your personal sales, came from a portion of their money, doesn't matter. It's all fed into there because you are the sole owner of that group. Yeah. So good question.
So it's different for licensed agents versus brokers.
Correct. Exactly. Yeah.
The company.
The company. Right. That's right. Exactly. But the concept's the same. All right, but your personal commissions could still go in there and just hang out in there. All right, you wouldn't have to pay yourself a 1099. You wouldn't have to say yourself. You still take a salary.
Salary, but also then shareholder.
Correct. Exactly. Now, for me, because I'm in Tennessee and all that kind of stuff, it's a little bit of difference. What I end up having to cap FICA because I take all my income as salary. Yeah. Just because of the way Tennessee is, and there's this extra, but it's starting to go away. There's a hall tax. What happens is this hall tax is 6.8% on shareholder distributions, right? So if I did myself, hey, let me just take a small salary and take the rest in K1, that K1 is going to get hit with 6.8. All right, and when I do the math and where I cap at FICA and all that kind of stuff, it doesn't make sense to do it that way. It's better to just do it that direction. So, but they're starting to diminish hall tax. It's going down 1% a year for the next 6 years. Because no state income tax, all right? Okay, I understand. Have you been to Tennessee in October?
No.
Oh, it's beautiful. I'm just telling you right now. Okay, see, it's gorgeous. Okay, it's just it's great. And actually, it's not. All I'm doing is I'm losing some money by doing that. But now they're starting to. Trust me, I've been hounding my local elected officials. What's up with this hall tax, dude? I mean, you guys are killing yourself. Do you know? No one's paying it because it's too much. I said, if you at least lowered it to where, I told him, I said, look, here's what I do. I said, if you lowered it to where, get it down to 2.49%. He said, why 2.4? Because that's the Medicare portion. All right? It never caps. All right? If you got it to there, I would stop paying Medicare and start paying you. Okay? And so here we go. But you got to get it there. So I don't know. They started listening. So it's now at 5% next year, 4% is starting to go down. So there's going to become a break-even point where I'll start doing it again. So, fair enough. Any other questions? Yes.
How do we do it we're a team with Future Home?
Yep.
So what do we do as far as, do I put our name and we both have to do a PL?
You'll have to do your own individual corporations. So what you'll do is on your DAs, for instance, when you get paid, the commission would be split between the two corporations. Okay, because you want to have your corporation separate than theirs, because you can't have a team name licensed with the state anyway. So we can't pay a team a commission. So it has to go to an individual agent or somebody that's licensed. Good question. Anybody else? Clear as mud? All right. Make sense? Yeah? Okay.
What can we learn, like, for the new agents, what can we do with the expenses?
You can do, I mean, anything that's a legitimate business expense. I mean, give me an example. I mean, you got your automobile expense, right? You've got all your advertising, books you buy, like when I encourage you to buy books for this class, that's education, absolutely. And it can be, the tax code, all right, much to a lot of people's chagrin, is written to the benefit of business owners. It really is, okay? Afterwards, when we stop recording, I'll tell you something else, okay? All right, so we'll clean this up for a second. Everybody done? We can stop recording, then I'll go one more. Everybody good? All right, and...